It's Greg here from BCR with a market update. So look, overnight we had a quite eventful US session with both USCPI data being released and obviously the Fed meeting. So look, firstly with USCPI, that came out marginally lower than expected. So the market expected to come out at 3.4%, the headline number, and it actually came out at 3.3%. So the number was actually super market friendly. The market got immediately excited about pricing in 2 rate cuts by the Fed before the end of the year. And the September meeting, the probability for a rate cut went as high as 80%. So the market went on a big risk party, and we saw US equity spike up, make new record highs. Saw the US dollar get sold off aggressively, and we saw precious metals have a good spike north. So look, the market certainly did expect for risk to continue that rally going into the Fed, but look, the Fed didn't turn up to the party. So the first disappointment came with the dot plots. So the previous dot plots we had, the Fed penciled in 3 rate cuts by the end of the year. So the market expected them to taper that down to 2 rate cuts, but the dot plots that were released last night had the Fed members only penciling in 1 rate cut for the end of the year. So that was a bit of a shock to the market. Then when we got the Powell's press conference post the release of the Fed, he was super vague. So Powell certainly didn't commit to any imminent rate cuts, didn't prepare the market for rate cuts. He just basically pushed the line that the data dependent. So moving forward, if the data warrants it, then we'll get rate cuts. But if it doesn't, we're higher for longer. So look, that did actually cap risk from spiking more post the CPI number. And we saw basically probably the biggest change in the currency market with US dollar buyers coming back in. So where does that leave markets now? Well, look, certainly we did finish the session risk bid. We basically saw US bond yields close 10 basis points lower across the board. So US 10 years and 10 years. Certainly that's going to help risk moving forward. But look, I think that with the US dollar though, it's hard to make a case for selling the US dollar further out if we've got no confidence when the Fed's actually going to cut rates, if they cut rates at all. So I think for the currency markets, we probably will see more choppy range-bound trading, but I'd be trading that with a bias of the US dollar bid and certainly buying US dollars on any pullbacks. As far as equity markets are concerned, certainly, look, US equity markets are at record highs. That is bullish. So look, it's hard to sell US equities, but I wouldn't be chasing US equities up at these levels fresh long. Look, buying the dip certainly has been working, so I'd imagine that's probably the best strategy moving forward if you're trading equities. Look, today we've got Aussie employment data, so we've got some local data on the agenda which could move the Aussie around. Anyway, look, good luck with your trading, and we will check back in with you shortly.